Wonderful good day, ladies and gentlemen. Commodity TV out of our studios here in Munich, and I have the honor and pleasure today, not a mining CEO, now with me is a guy really coming out of Vancouver, a real professional out of the resource universe. We have here John Kirk, the Vice President and Senior Investment Advisor from Jordan Capital. John, thank you very much for taking the time.
Thank you. Nice to see you again, Johan. My pleasure.
And my pleasure, of course. Well, you are, a market professional, a professional investor, of course. You have a lot of clients in Vancouver and also around the world. And you are really in the heart of the junior mining industry. Mm-hmm. What is the status today of the junior mining industry?
Well, it's still very difficult. There's challenges, but I'm starting to see some things that I just can't ignore. Mm-hmm. The market's been range bound probably the last 12 months. We've gone through a 65% correction. This is the second worst in TSX history. Mm-hmm. Unfortunately, I've worked through both of them, so I've seen this before.
Oh, you don't look that old.
Oh, well, I feel old. Typically after a correction like this, you get a good recovery. In the last 11 years, there's been 7 corrections, average 30-35% loss. Mm-hmm. Afterwards, you see a recovery somewhere between 70 and 90%. This one's been especially bad. I'm looking for a recovery, but you have to be smart. Mm-hmm. You know, the last time the TSX Venture was at this level was 2003. Mm-hmm. I believe gold was under 400 an ounce. Yep. Oil was 30-ish a barrel. Mm-hmm. You can't ignore these things. Yeah. So you have to be selective, but it's time to be a little bit more aggressive. I've been cautious with my clients. Mm-hmm. Now I'm starting to encourage them to put their toe in the water, so to speak.
That's right. Yeah, I think you have to be very picky with the deals. You
Absolutely.
You have to do, I think, even maybe double the research you did in former years, because there is still, I would call it, some trash out. Yes. But also we have beautiful projects which have a great management, great setups, and they will gonna make it. Because one thing is for sure, we will need resources forever. Otherwise it's not working.
The good thing about a correction like this is you really can see what is the garbage, as you say, and what is surviving. The good management teams are investing in their own deals. They're able to raise money even in the terrible climate we've had, and the trash is revealing itself as trash. You're seeing $200,000 financings. You're not creating shareholder value. No. It's just paying the G&A, and these companies dilute and dilute and dilute. There's a rollback coming at some point, and you know, it's an opportunity. I'm not scared anymore. I see the opportunity.
Great. So that means you see the markets now bottoming out after this, let's call it 80% backdrop we had. Mm-hmm. And so after 3 years, you think there's really the chance that we will, by autumn or whatever, we will move higher finally?
You know, I do think we'll have a good autumn. I don't like to put dates with anything, but I'm looking at the risk reward, and you know, I think we've had $4.5 billion in hostile takeover bids the last 6 months. That's 10 times 2013. We're all only in June. You know, statistics like that. I look at companies like Timmins, like Rox Gold, that have resources, and these are gold companies, of course. And the majors, with all their cost cutting, they're not doing the exploration anymore. And you know, they're going to have to start looking at the mid tiers or the new companies with a resource, with a great management team. So I think there's opportunities to pick off a couple companies that could be taken over. And then, of course, I'm still in the junior space, and I like to look for the next Timmins, the next Rox Gold. And
okay, when we talk about the junior space, we have spoken now a bit about gold and silver, because a lot of people, or let's say a lot of investors, always think about first gold and silver. What other metals do you think are interesting for the future? Maybe if you think about copper, the king of the metals, or if we go a bit more, I call it exotic if you want, like tungsten, like tin, like nickel appreciated 40% the last months. What is your feeling about it?
I think all the metals are attractive right now at current prices. Copper inventories, I think, have surprised a few people. The Chinese, you know, 7.5–8% growth, it's not insignificant. It's down from a few years ago, of course, but I think copper is attractive. I financed a company recently, Cyprium Mining, who you know. They have a very interesting hybrid model, copper. Speaking of exotic, tungsten, tin. 2 years ago, I knew nothing of these and nothing of the market. I continue to support and love Blackheath Resources. Uranium.
I've been down site lately.
Excellent, excellent. I have as well. And uranium, certainly it's a matter of when, not if, we're going to see a recovery. I think the wind is at the back of uranium perhaps before the end of the year. So again, but I come back to management. doesn't matter whether it's tin, copper, uranium. If the group doesn't have a track record of success that I trust, that has skin in the deal, I typically don't touch it.
Okay, cool. Do you want to give our viewers maybe some estimates about, let's say, gold and silver prices? What are you thinking? Do you think we have the bottom here also? Do you think we can go back up to 1,1500 levels or even higher?
Well, certainly we can. Timing is everything, and I don't like speaking on camera with an exact price and a date, of course.
No, I'm only
but I think, yeah, you know, talking about China again, the appeal for hard assets is not going to go away. The M&A activity that's happening, Price Waterhouse, Ernst & Young both came out with very bullish comments on gold and silver for this year, again on the M&A activity. Copper looks very healthy at these levels. I think, as I said, there's not the stockpiles that people thought there were.
Yep.
And I'm cautiously optimistic before the end of the year that we'll see gold in that, you know, it's going to be range bound between 1,200, 1,400. It's very difficult. There's so many geopolitical and other events happening in the world.
That's right, absolutely.
It's tough to say.
Super. John, thank you very much.
Thank you.
It was very refreshing. Thank you.
My pleasure.
Perfect. Thanks.
Cheers.
Yeah, ladies and gentlemen, that was John Kirk, the Vice President and Senior Investment Advisor of Jordan Capital. He was speaking out of the heart of the junior industry. He is in Vancouver based. And yeah, he sees the bottom, so do we. And hopefully the resource prices will start to move higher. And as he said it also, companies like Timmins Gold producing at costed over the $950, for example, in the gold space, making still money on this point. And our Rocks Gold, you think I named, and also Blackheath Resources in Cyprium, and there are many, many more very good companies. Watch out for quality, have a look on quality, check it double before you invest, that's for sure. Make your own research, and thanks and bye-bye from Munich, and thanks for watching Commodity TV.